Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Foreign debt problems are pressuring U.S. markets. How that affects you is just one thing that we're talking about at this week's Roundtable with our editor-at-large, Steve Reitmeister, Research Director Shiraz Mian, and market technician Kevin Matris. So apparently now the foreign debt problems in other countries beginning to be problematic for U.S. investors. So I thought I'd open up by just going down the line real quick and asking you, that being the case, is there anything different that investors should be doing now with regard to plotting out their investing decisions here going forward? Steve?
There's a rise in skepticism that there are continuing problems out there, that the world economy may have a harder time expanding. And so people were super bullish because of the rise in the market last year. They may want to pull back to a more conservative standpoint. So I'm not saying to be out of the market, but I'm just saying that their mix of stocks should probably be a little more balanced between growth and conservative elements.
What about those investors, Shiraz, who might be considering foreign investments at this point?
I don't think they need to make any adjustments. I would disagree with some of that assessment. I think it's too much noise out there in the market. You just write it out. It'll take care of itself. It's one of those bailout issues like we did here in the U.S. for Wall Street and the financial sector. Europe has to take care of itself. And Germany and France has way too much skin in the game to let any of its members go down.
Right. All right. Kevin, what about you? Is this just adding more noise to what's already out there?
You know, I mean, they are causing some nervousness in the market, but I don't think anybody really thinks that Greece is going to screw up the entire world economy. But I am seeing there does seem to be some people who are starting to pull back some of their international holdings, because people are worried about what would happen if, let's say, these problems start to spread to a lot of other countries. And that is what everybody's been talking about, the pigs.
All right. Also this week, in the hearing that was not actually heard because Washington was closed down for a bad snowstorm, Federal Reserve Chairman Ben Bernanke said that the Fed could begin pulling back on stimulus of the U.S. economy by removing some of the cash from the financial system and then raising interest rates as the economy improves. Shiraz, what does this mean for the market here going forward?
I think on balance, it's a positive move from the Fed's angle. We need to see the Fed coming out and choreographing a game plan as to how they would be exiting and getting out of the excessive stimulus that they pumped into the system in response to those extraordinary times that we seem to be forgetting towards the end of 2008. So it's a good move from the Fed. The actual interest rate increase, on the other hand, is a fairly down the road scenario in my view, late 2010, early 2011. But just taking some of these, they also announced that they will be removing the mortgage purchases in the beginning of March, and then this one. I think this is, on the whole, a good reassuring signal from the Fed for the market.
Steve, you and I were talking about that, and you viewed it pretty much as a non-event for the market, but the market did search for some direction afterwards.
Yeah, what Bernanke is saying is, I got a bag of tricks. It's not just the Fed funds rate. I got a number of things I can use. So, as he always said, he wanted great clarity with his chairmanship of the Fed, and I believe he's laying out the game plan of what he'll do. The when is what everyone wants to know. When will this happen? And what he's saying is, we're not even close to it yet. Right. Okay, so I'm letting you know this is my bag of tricks, but when we're going to do it, when the economy is stable enough to do it, and when we need to make sure that inflation is not a problem, and right now inflation is not a problem.
Right. All right, Kevin, mixed economic news out this week, and without going into quite a lot of detail on it, what does all of this mixed economic news here in the U.S. mean for investors?
Well, I mean, the market is pulling back. I think we've already seen about a 4 or 5% correction from the high, and people are worried because we saw pretty much a straight 9-month higher price movement in the stock market. We hadn't really seen any kind of real correction. Now with some of the economic reports coming out that are kind of suggesting the economic recovery may be a little bit less robust than what people had thought, now people are getting a little bit nervous and they're pulling back. But actually this correction is kind of healthy And if we do pull back, let's say, to the 9,700 area, that would probably give us the 10% correction that everybody had been hoping for. And I think that would be a spectacular area for this bull market to start to continue again.
What about the labor front, though? Initial jobless claims that came out this week dropped by their largest amount since July, although unemployment remains high.
Well, sorry, it dropped because they had there was some delays in the way they were counting in previous weeks, and so we went up a little bit to like the 480 range for weekly claims, and now it's down to 440. But we've had numbers of 440 or less. What we need to see is the jobless numbers get closer to 400. That's about where there would be a nice balance between jobs lost and jobs gained. And we start to creep underneath that, we will be talking about an increase in the labor pool, which would be a good thing.
All right, quickly, Shiraz. Retail sales rose more than expected in January, but the Consumer Sentiment Index is not a good sign for February. It slipped. Can we count the consumer out as far as this recovery is concerned, or not yet?
I wouldn't go there. Despite the fact that we have such a big drag on the labor market, we saw good numbers on the consumer side for January, and the December numbers were revised upwards too. So on balance, I would consider the today's news on the consumer front to be positive.
Still some hope left for the consumer, then.
Absolutely.
Right. All right. That'll do it for this week's edition of the Roundtable. We appreciate you joining us, and we look forward to seeing you next time, and we hope that the week ahead for you is a profitable one.